Is Margaret Keane, is she right that in fact the traditional retailers can move aggressively into the digital area?
Yeah, you know, at Bain & Company, we feel pretty strongly that there is room for physical retail. You know, at the end of the day, we talk a lot about what's happening with e-commerce, but 80% of sales still happen in a physical retail store. And as we look across the retail landscape, we do see people Amazon-proofing their business and really being successful in this environment. You know, we see really 4 things that retailers who are successful in this environment do. First, they create a really compelling in-store experience. Give her a reason to shop. So, for example, you know, if you were to go to a Sephora or an Ulta, it is truly an experience to learn, to explore, to try product, and they have been successful, actually, in fending off the Amazon threat for that reason. The second thing that we see successful retailers do is just create a compelling loyalty program. You know, build loyalty with her and make her want to shop with you. So, you know, to use again the example of Sephora, the Beauty Insider program, or if you look at Carter's, which is children's retail, you know, they have a Rewarding Moments loyalty program that's been quite successful. So that is something Amazon, even with Prime, can't quite tap into. It's a special relationship between the retailer and the consumer. You know, we also see unique product being a big driver, Aldi, Trader Joe's, and the like. But you know, in our view, the most important defense against Amazon is really connecting and using the physical store. The store is a hub, right? It is a great opportunity to connect the digital and the physical experience. Buy online, pick up in store. You know, reserve online, try on in store, and that gives consumers the convenience and really the opportunity to do the look, touch, and feel.
Omni-channel. We were talking about this yesterday, and even Amazon's recognizing that they need the in-store for that too. Seema, come in here.
I absolutely agree with that. And you see retailers adding experiences like hospitality to get people to come in and maybe eat something and buy something on, and the fulfillment that she spoke about. You know, buy online, ship from store, buy online, pick up from store, to sort of meld those so you can buy whatever you want, whenever you want, but also pick it up and get it how you want it.
Vandana, you have also broken down by income group how healthy and what drives individual consumers. So to answer the question of this segment, how healthy is the consumer? And just even if you look by income bracket, what are we seeing in terms of confidence? Oh, the perfect chart.
Well, you know, when we think about consumers at Bain & Company, we really think about it in 3 tiers.
Yes.
There's the lower income consumer, there's the aspirational, and the affluent. The lower income consumer, these are folks, household income less than $50,000 a year, and their spend is driven largely by wages, and wage growth has been strong. Average weekly earnings, wages have increased at about 3%. That second aspirational group, you know, their spend behavior is really driven by home value, and home value is up 8%. And that final group, the affluent group, you know, these are folks that 20% of the population, but 40% of the spend. And for that group, it's the value of their financial assets, which is also appreciated nicely over a long period. So in totality, the consumer health, I mean, there's a reason to be optimistic here. All 3 segments have been, you know, the underlying drivers of economic behavior have been helpful.
So, Seema, which retailers are best positioned to take advantage of that segmentation?
Well, she mentioned the home value. So yesterday, Home Depot reported, and I know the comp was a little softer than people expected, but it really, I think, really was because of weather. April was very cold, and they've already seen a resurgence in May. So I think you'll see that continue to happen as home price appreciation continues. And even if there's an affordability issue, the average age of a home is probably over 30 years old, so I still think you see strength in that sector, and then, of course, online.
When we interviewed the CEO of Home Depot recently, he made your point, Julia, actually, that they're seeing millennials start to form households finally.
Right.
That's really going to help them.
Yeah, and
absolutely.
If you can't afford it, you go do it yourself.
Yes,
Back to my plank of wood.
Yes.
Talk to me about how much of this is credit fueled, though, because we are in a rising rate environment.
Yep.
How much of this is dominated by credit, and is there any element of cautiousness that sort of filters into your thinking as a result of that?
Yeah, I mean, there's always a reason in this economic environment to be a little bit cautious for the reason that you described. You know, I think where we get a little bit of comfort again is the strong wage growth, the strong underlying growth in home value. So there's some economic fundamentals that are strong, but it's always worth being cautious.
Yeah, and Seema, it's interesting. I talked to Margaret Keane about that from Synchrony, about the question of credit, and what she says is yes, absolutely, we're seeing credit grow. There's more borrowing, and absolutely, there's a little bit more delinquency, but we're not back to normal yet. I mean, we've been in a very artificial period.
Right. No, I think that's true, and you're nowhere near the peak, I guess, in charge-offs, but I do think you have to be cautious and watch the change. Look at auto loan delinquencies, and household credit debt is very high. And for many big ticket purchases, it relies on credit, and a lot of retailers drive revenue from this credit. So I think it's something to be aware of. And particularly on the low end with gas prices rising, they might not be able to get credit. So there's something just to keep an eye on.
So as you look at the retail environment, and particularly consolidation, potential consolidation, we're reminded, for example, of the Walmart acquisition of Flipkart over in India. How much more are we going to see of that, the traditional, as it were, retailers really moving aggressively into the digital world?
Well, you have to sort of step back and think about the market context here. If you think about how much Amazon has spent on technology to create the experience that they have, it's something like 12% of sales. Traditional retailers have spent more like 2% of sales. And so there is really a gap that's driven that's very, very hard to close because, as we all know, Amazon is not sitting still. And so some of these acquisitions are either, in the case of Flipkart, to enter a high growth market quickly, but in many instances, it's really to try to close that gap, get the talent, get the technology expertise to try to race against Amazon.
Acquihire, as it were.
Yes.